Hey everyone, it's Laura here. It has been a really long time since I have done a Financial Fun Friday video, but there is definitely a hot topic I wanted to hop on and just talk about for a few minutes, and that is interest rates. If you have not seen what's going on or heard what's going on, interest rates, especially on mortgages, have taken a pretty sharp turn up. In the most recent weeks. So we have gone somewhere from the mid to high threes to the mid to high fives in a matter of about a month and a half. So it's been a really crazy time. So just wanted to share some consumer information with that. This is especially important if you are a person who has been looking for a home. Maybe you started last fall or even earlier this year. You definitely want to check in with whoever you are working with on your pre-approval, if it's me, if it's somebody else, because that rate has probably changed. And why is that important to you? Number one, it's important because we can't lock in an interest rate until we have a property contract in place. So that has to, you have to be under contract, have to have a purchase agreement before that rate's locked in. So really, we can discuss what the rate is at your pre-approval stage, but we're not going to know exactly until we go to lock in after you're under contract. So, things may have changed. I've had some people, depending on the price range you're looking in, you're maybe talking about 30, 40 bucks a month, but some people you're maybe looking at 100 or 150 a month, depending on how much the rates changed and all of that. So I think really important when you're doing this is to, instead of worrying so much about the rate because they're so crazy, and none of us have any control over them. That's the other issue, is that we're just kind of all along for the ride on these interest rates. So it is what it is, and we're kind of stuck with what we have. So with that, really getting comfortable with what am I truly comfortable with paying per month, because maybe at first I say to you the payment's going to be $1,100 a month. And at first that's some sticker shock because you were expecting to pay maybe 8, 900. So, kind of thinking through that realistically, looking at your budget, making sure that, okay, if 900 is really, really my top payment, then you need to maybe be looking in a smaller, lower price range for your payment. So with that too, I don't want anybody to be surprised, but let's make sure that we're looking at all of the options when it comes to your loan. So for example, maybe husband and wife are going to be on a loan together and husband's credit isn't quite as good as wife's. Could we look at doing the loan just in her name just to get you the best rate possible? Would it be better to have you both on title, both still full owners, but only one of you on the loan? Is it a better option to do a little more down payment? A lot of people don't know, if you were planning to do 20% down, 25% actually seems to be, in most cases, a good break for interest rates where you get a little better rate. So some of those types of tricks, just making sure you're talking through with your loan officer, with me, with whoever it is, making sure that all of those options are there and viable. The other thing that we need to start looking into doing more and working on is something called a credit rescore. So if you come to me and your credit's not exactly where it needs to be, maybe we need to look into what we can do to get your score up, to get you in that better interest rate, to get you in that better loan product. Maybe that gets you the difference between an FHA and a conventional loan, which is going to make a better offer, which is going to make the whole process a lot smoother for you. A lot of people also don't think about things like homeowners insurance. So you may just get a quote from the agent that you've had for 20 years and it's good. And, to me, it's a little bit on the high side, but I don't know what relationship you have. So, we go with that quote sort of a thing. But you could be leaving $200-$300 a year on the table, which can sometimes translate, to $40, $50, $60 a month. So looking at some of those kinds of options to make sure that we stay in that payment that you're comfortable with. The other thing to look into is the PMI. Are you able to maybe squeeze out and do 10% instead of 5%? So that's going to make your PMI go down, which is just, again, going to help the monthly budget as far as the payment goes. So just wanted to hop on. I could probably talk all day about interest rates. Really what drives them, again, out of all of our control, but it's just a situation that we're kind of in. As always, you want to pick a lender like myself that is really going to talk you through all of the options, be transparent with you about what's going on. And I would be leery if someone's offering you a super low rate. Make sure that you're not being charged heavily for that. I had someone that said, oh, I'm getting 4%. Well, then when we looked into it, they were being charged $8,000 for that rate. So just making sure you're comparing apples to apples if you're shopping around. And as always, give me a call if you have any questions.